Finance for hippies, tea, swag and Ndarkie. Finance for hippies, tea, swag and Ndarkie. Finance for hippies, tea, swag and Ndarkie.
What up? Welcome to another episode of Finance for Hippies, brought to you by Don Salamanca, aka Ndarkie, chilling with
teeth to the swag.
The first innovation man ever did. The first invention was fire. Back in the day, some brother brought in two sticks. He rubbed them together. Fire came out. We're now in the middle of summer. It's about 35 degrees. Fire's coming out. We're now sipping on more fire to cool us down with more fire. Fire against fire. Fire coming out. My brother, I sound like a pastor. Fire, fire, fire.
Oh, you are focused today, Ndarkie. We got a guest today who's focused. We ready today, man. We ready today. We got 22/7. And we got something very, very hard for you guys today. So I hope you guys are ready.
This is the remake, the sequel to the first episodes of season 1. Where did my money go? This is Where Did My Money Go To? With our guest, Jikku from 22/7. Let's go.
All right, cool. So yeah, we got our guest. Ndarkie's out here stealing my job. It's not what we signed you for, but we got an amazing guest. You know, we give you the hottest guest out here, and we've got an amazing, accomplished guest, Mr. Jikku Joseph from 22/7. He's basically the head of, he's basically the managing director of 22/7. He has a master's from Stanford Graduate School of Business. That's not South African. That's like international. You know, it's our local listeners.
Technically, we have an international
international here. You know what I'm saying? He was also the former head of Old Mutual Digital Design, and he's also, you know, the man who I heard say he wants to give our Rainbow Nation a chance to try again.
For sure.
Jikku Joseph, what up?
This is what Welcome to the show, Jikku.
Welcome to the show, man. Yeah, thanks for having me, guys. It's awesome to be here. I love the energy already.
We love having you be here. It's really an honor to have you. It's really an honor to have you here. You know, as I said, you know, you and me, I think we're on the same catalog of understanding. Ndarkie, we'll bring him along to everything that's going on here, but yeah, it's an honor to have you here. And you know, we're gonna get into just your story of how you even got to just be who you are. I think there's a beautiful story that I've seen you share on, you know, just some content that we found. So maybe you can just, you know, take us through that a little.
Sure. So my background, I was born in Garankuwa, actually, just outside of Pretoria, way back in 1984, so 36 years ago. I grew up there. First 10 years of my life, we lived in Garankuwa, and then we moved into Pretoria. I did my schooling, all Pretoria side. I had the blessing of being able to go to Pretoria Boys High School, and then I left Pretoria to go to university and studied at UCT, did an undergraduate degree in actuarial science, qualified as an actuary. And then I worked at Old Mutual, and Old Mutual's been great for my career. I've spent quite a bit of time there in different roles, technical roles, and then my eyes were opened when I had the opportunity to work for the CEO. I've always personally had I guess on the basis of my undergraduate training and my personal affinity towards technology, I've always seen that there is the power of technology to close the gap. There is a potential for the power of technology to close the gap between people who know enough about financial services and people who don't. And because of this personal interest in tech and this knowledge that I had, I built up over my first 10 years or so in the working world, plus my undergraduate studies. I thought would be a great challenge to take on, is see how we can help make our country more financially secure, more financially strong, more financially able by leveraging the power of tech. So, throughout the rest of my time at Mutual, I spent some time in the digital space. I mean, you mentioned it, Titswag. I spent some time looking after the head of, and I founded the Digital Garage, and I was the head of digital and design at Group. But where I really, really am finding, a lot of enjoyment and passion now is at 22/7 and the work that we're doing. So I'm really excited to be here to talk a little bit about that, but just more in general. Let's talk about how we can help people and where people's challenges lie today.
From what you studied, already I have mad respect for you. Actuary, as we all know, is a very complex and difficult subject to study. That means you're really a numbers guy, and you know when the numbers add up and the numbers do not add up, which is quite befitting for the topic of financial literacy that we're trying to investigate a bit further. But outside the numbers, who is Jikku? What type of a person are you outside career, outside? What do you do for fun? Are you a golfer? Do you, some people I've seen drove by the N3, they're flying model airplanes, I'm a rapper. What do you do outside the responsibilities of life?
Outside of the responsibilities of life, eh? So I'm a big fan of sport. So I'm a big sports fan. I'm a huge fan of Manchester United. Apologies for all the non-Man U fans in the room and on the cast. I'm a massive Man United fan. So it's a lot of my TV time watching them play football. Also a big foodie. So my wife and I, we love touring different markets in the city. We're blessed in our country and in our city of Cape Town to have many markets on the weekend. So we go out and we try different markets every now and then. Since lockdown, things have slowed down. We're getting back there, slowly but surely. And more recently, we've had a little girl in our life. So she's now 3 years old. And it's another part of your life. I don't know if the two of you are parents yet, or not that you know of.
No, not yet. We're still budgetary. Unfortunately, we cannot afford.
Yeah, and that takes up a huge part of your life, and it's a really, really exciting part of my life that I enjoy is watching my little girl grow up, and I spend quite a bit of time with her as well. So those are the things that are keeping me busy right now.
Yeah. No, that's brilliant. That's brilliant, Teeth.
That's amazing, and I'm sure that also has just evolved your own outlook as well, just on how you balance your work-life balance as well. Like growing your family, and also how you've been able to look at just how you handle things like money as well. Obviously, right?
Yeah, when you go through big life events, right? So having a child is one of them. Buying a home is another. You typically see that those are the, buying a car would be a third one, I assume, or even starting your job. So if you think about these important life stages, there are these big moments in your life when you really start to, sit up, if you tie your imaginary tie and say, "Ooh, I need to look at my finances with a little bit more rigor than I was doing before." For us, there are two big events. The first time we found out we were pregnant and about to have our little girl. And the second time we signed the offer to purchase or the home loan agreement with the bank for buying our home. And that, those big moments really make you sit up and take notice of where your money's going and what you need to do in order to make sure your money's going where it needs to so you can achieve, your goals.
And in terms of philosophies, as a person with, I'll definitely say, higher than average knowledge of financial literacy and management, what type of philosophies have you really seen yourself using throughout life in terms of managing your cash?
Yeah, sure. So, the thing that you may find counterintuitive, right? So I work in financial services and I've been trained in it, and it's like I get up and I eat, breathe, and live this stuff every day, right? But the truth is that I appreciate that nobody else gets up in the morning saying, you know what, oh man, I can't wait to get out of bed today and go and learn about finance, or they download the latest finance app and, really play around with that finance app because it's going to get me excited. My philosophy on the stuff is finance is an enabler.
Yeah.
And a lot of the time where we think things are too complex, I often use, there's a continuum of financial knowledge, right? So there's people who are complete finance novices, know very little, and then people who know a heck of a lot about finance.
Yeah.
And most times we think we need to be here in order to be successful. But actually there's some fundamental bits of information that you need to know that will help you get started and will cover you for a lot of your financial, a lot of what you need to know in order to get to financial stability or strength. So it's not as far away from us as we think it is. And, the philosophy that I have is primarily around don't rely on yourself to make correct decisions all the time. Take away a lot of that, that complexity by automating as much of your financial life as you can. So yes, read up about finance to a certain extent. You need those basic bits of information, but also set yourself up to be on autopilot. If you can automatically track your spending in a way, if you've got, the Finance for Hippies podcast or video cast automatically set up on your playlist and it comes up, every month. When you're switching on your TV or putting on your computer, it shows up as something you should be watching now. Automatically setting up debit orders for spend. We can go into all these things, right? But automation for me is the key to protect you from your future self, because a lot of what you end up doing on a day-to-day basis can impact your chances towards long-term financial strength. And if you automate a lot of that and you operate within the constraints after you've automated stuff, you're much less likely to make bad decisions going forward. So if I had to pick a central tenet, it's automation and the power of automation.
Which is very powerful considering where we are. If you look at a concept such as forecasting alone, I know we'll go deeper into that, but if you look at how even from a corporate side or individual, usually it used to be so hard and a daunting task to think about when you just had to do your budget, your forecasting for the month and so forth. It just deters people from continuously looking at their finances. With automation, then that mundane task is removed and you are left with the more core analysis that you need to really, that's where the value of analyzing where you spend your money is. So automation, definitely, I fully agree with you, Teeth.
Yeah, I think I definitely agree with that, but actually not even but. I like that that's a certain mentality that you seem to have picked up from somewhere, or is that just something that you learned through walking through life? Because I heard we skipped over it a little, the kharankua, maybe you heard that kind of thinking from somewhere. Where did you even get that way to approach making your life easier?
I guess it comes down to my affinity for tech, right? So remember I mentioned earlier on in the call, it's like this, there's so much about technology that makes our lives easier than once was the case. I mean, I know, Ndarkie, you mentioned it just now, right? It's so difficult to, let's use an analogy, right? If you get up in the morning and you actually, one of your goals for that morning is to go out for a morning run, you are less likely to go out for that morning run if you have to get up in the morning, change out of your pajamas, into your running gear, put on your running shoes, and get out of the house and go out for a run, right? And you're more likely to go for that run if you actually go to bed in your running gear. So not your shoes. I mean, I think that's a step too far. But if you go to bed in your running gear, shoes right next to your bed, get up in the morning, shoes right next to my bed, jump in my shoes, I'm going to go for a run. Yeah. It's the barriers between getting to the outcome and where you are that actually impact your likelihood of success. And if we think about tech and the power that tech has today to help us simplify those out, getting to those outcomes, and it's not just tech in our, in the traditional sense. It's not just about apps. It's about debit orders on your bank account. It's about applying for a service online once. So if you can do those little bits of things that previously were not really accessible to everybody, you can set yourself up to reduce those barriers. So I guess a lot of the power of automation comes from my affinity for tech, and also what I've picked up, I guess, over time. When I was at business school, one of the courses I did was around the consumer mind, the psychology of the consumer mind, right?
Cool.
And there are a lot of behavioral science concepts where they teach you that people are not rational. So I'm sure you've heard of there's the distinction between behavioral economics and traditional economics. Now, traditional economics assumes that every human being is purely rational. We make decisions which are actually trying to focus on getting to the perfect economic outcome for us and for everybody else. Behavioral economics actually says, human beings are not these Spock-like creatures. They're actually like Homer Simpson. Everybody, whether you're an actuary or whether you're, someone who is, just starting high school or primary school, is unqualified, right? We all have the same sort of human tendencies around, I see something I really want to buy, and I just go ahead and buy it without thinking about the long-term effects. I assume in my head I'm spending 500 Rand on eating out and takeouts because I'm using mental arithmetic. But back at the ranch, if I get the true numbers, I'll see I'm spending a lot more. So there are a lot of behavioral science concepts that actually prevent us from being our best selves, from living our best lives. And if we can take out our irrational selves from the equation and do that through automation. So at those points in our life when we're rational, when we're actually thinking in the correct way, if we set up that automation in advance, we can give ourselves the best chance of future success. And that's sort of why I drive towards automation. I could go on about another thing. I don't know if you've heard that there's a statistic. I'm going to be misquoting it, right? But it goes around the way it sort of goes like this. The best investors, I think, on the US stock exchange were people who put their money into the stock exchange and just died. They actually died and they left their money in the stock exchange. And the stock exchange just continued to grow. And that's because all they did was they put their money in and they left it there, right? They weren't.
Oh, you mean you don't mean physically not dying. You mean they just left it. Sorry. You don't mean metaphorically dying.
I think
No, they probably died.
We'll have to.
Sorry, I just wanted you to clarify that.
No, but I think the study was actually around people who put their money in and just forgot about it. But maybe they they actually died, right? And that's why they were able to withdraw the funds. But those individuals had the biggest growth versus the average investor, because the average investor is constantly thinking, oh, should I buy or should I sell? And our human side comes in and our emotional side takes over, and we tend to make the wrong decisions, which is why I really want to focus on how do we automate things, and also how do we keep things really, really simple. Because if we keep things simple and we automate them, we can really maximize our chances of long-term financial success.
No, definitely. And personally in life, what if you look back, what do you think is the biggest financial mistake you've ever made, where you look back and said, maybe that wasn't such a good idea? Any large purchases, any, not the best? Earlier we were talking about Bitcoin as to when it was hot back in the day and how it crashes and how people look back and say maybe it hadn't been tested throughout time a bit. Any nasty little memories from a financial perspective?
Not allowed to mention any support of Man United. We understand that. It's off the book. It's a mess. Be clear.
So we can talk about a few examples, right? I think if I start with the most let's start with the I guess the slightly funnier example, which is earlier in my career, I was doing what I'm telling you not to do, which is pick shares, go online and find shares to buy. So yeah, one of the mistakes I made early in my career was investing in specific stocks, more specifically a stock in a company called One Time Airlines. And you may remember One Time Airlines, and you know where this story is going. But the moral of the story is, even if you think how successful a company will be, and I remember when I was investing in One Time Airlines, one of the biggest drivers for me was, the shares seem cheap. It was less than R1 a share for a One Time Airline share, and I really enjoyed my experience on One Time Airlines. Low cost airline, service on time. And I invested, and if I had done just a little bit more research, which most people actually don't have the time to do, the average Joe doesn't have the time to do, I would have realized that actually investing in airline stocks in general is a bad thing. The airline industry is fraught with troubles. I mean, we can see it in our national carrier today, right? The struggles that they're having, which is a function of many things, but even outside of SAA, airlines around the world struggle to make a profit, right? And I remember I put in 15,000 Rand, which for my first couple of months of salary was a massive investment. And the funniest part of the story was I was in Cape Town on a flight to go back home to Johannesburg for the weekend, and I was flying One Time Airlines. And at 3 p.m. on the day I was supposed to fly at 6 p.m., I got a mail from the airline saying, "Apologies, sir. Your flight has been cancelled until further notice. One Time Airlines is filed for liquidation." And that's how I found out that my money, my 15,000 Rand that I invested in One Time Airlines was going down to zero. And I never saw that money again. So that was one of the risks in my life, or one of the bigger mistakes I made earlier on in my financial life. I think. Sure, go for it.
Sorry, just to cut you off there, sorry to interject. I think what people do not understand is that stock picking, individual company stock picking, it's a profession unto itself. It is not something you can do part-time, or there's heavy analysis, rifling through data to really pick out the best investment, which is even with the evidence of easier trading now, people believe that it's actually under the misconception that it's actually easy. You simply pick a company and you put your money in and it's going to do well. In actual fact, it's a profession unto itself, and it's very difficult and quite hard to really be a consistent winner individually picking stocks. I don't know what's your opinion on that.
Yeah, and I've got strong views around that, right? I think one of the downsides of being able to do it more easily than you could before is that we're exposing more people to the risk of picking stocks individually, right? And, the funniest thing is, right, Ndarkie, you say that it's actually a profession. It is a profession, and there are people who are experienced and doing this on a day-to-day basis. They perform, lots and lots of research, and then they make a stock decision on the basis of that. But the truth is that even those professionals themselves don't get it right. There's I talked about the investors who are dead outperforming active managers on the US stock exchange over the last, I can't remember the period, right? I'm going to be misquoting that. But if we just look at the most recent experience, the COVID crisis, right? There was a study that was done by Morningstar where they found that, I'll be misquoting the percentage again, but the majority of active managers, so people who get up in the morning, whose job it is to perform the research and choose the stocks, they underperformed the index. And the difference between the active managers, so these guys who are investment professionals who are choosing the shares, and the index is that the index is based on a fixed formula, and it's investing in all the shares in the market on the basis of this fixed formula. So these index funds, which are purely following this fixed formula, outperformed the active managers. And if you think that these professionals are being outperformed by this fixed formula, it just goes to show how the rest of us who are not in the investment industry are on a hiding to nothing if we try and do that ourselves. So it really is difficult. And then if we come back to behavioral science, which I talked about a bit earlier on, as human beings, we're so also driven by emotion. And what tends to happen when you're stock picking and making these decisions on the basis of emotion is you'll buy high and you'll sell low. And that's the worst time to be buying shares, because if you're buying high, you're buying it expensive because you think the market is going to run. You think about your Bitcoin example that you used. When the Bitcoin market was running, oh man, we all wanted to jump on that train. And that was going like a train. And then as soon as that train went down, everybody started to sell. But most people sold at the wrong time. So they bought expensive and they sold cheap and they made a loss. And that's one of the biggest risks with picking stocks specifically. What you should be rather doing is investing in diversified shares, which are called exchange traded funds or ETFs. And those shares, if you buy that share, that one share already gives you exposure to the entire, to a series of shares that gives you what we call diversification. And that's like a simple, that's a simple way of doing it, right? Buying a simple diversified share or investing in a tracking, an index tracking unit trust. I mean, I know I'm going into terminology here and jargon, but you get unit trusts which track a series of shares on the basis of a fixed formula. Those are called index tracking unit trusts. And then you've got what's called an exchange traded fund, which is one share, but it's actually tracking the performance of multiple shares. So it gives you that diversification. You're not just investing in one-time airlines, you're investing in a series of different companies. And if one-time airlines happens to go default, that's okay, because the rest of your investment is actually invested in a series of other companies. So this fundamental rule of picking something that's diversified and is not really at risk of human emotion or impacts of human emotion is one way to overcome that problem.
Just to hand over to Tis, this means that this reinforces really what we all been trying to discuss, which is to really grow financially and do well in the long term, is to really take care of the basics and not to try and pick one shooting star, which is virtually impossible. Therefore, we all need to really work on managing our finances properly. And the key principle really is starting with the amount of money that you currently have and seeing what you're actually doing with this. Teeth.
100%. I think that's true. And one lovely thing that I'm picking up just even from having this conversation with you is within art, we've got the philosophy of minimalism. Are you familiar with minimalists and within the field? Would you consider yourself that? Because it seems like it almost seems like an overlying principle with how you approach things. Would you consider yourself a minimalist?
Yeah, I'm a sure. So the other thing that I really am passionate about is the climate, right? And the impact that the climate, yeah. So the impact that consumerism is actually having on our climate. The more stuff we buy, the more we use as a human race, the more unsustainable the planet becomes for all of us to live on, right? And I know we each have our own challenges, and that's absolutely fine, But for me, one of the things that drives my, I guess you could call it quote unquote minimalism, is this care for making sure that when I buy something, I actually really, really need it because of the potential negative impacts that thing that I'm buying has on the environment. We've stopped this thing where we now buy Christmas gifts for people without asking them what they want for Christmas. We stopped this thing where we buy birthday gifts for people without asking them what they really need, because I don't like this idea of just buying stuff for people that they're not going to actually use or find value in. And I'd rather also, instead of buying material things, buy experiences for people, because those experiences, I guess in most cases are things that people will enjoy more, but also in some cases or most cases will actually be better for the environment than buying a material good. If we remove all of that, right, around the environment, my philosophy is, spend money on the things that bring you joy. It's the things that make you happy. And what we tend to do in our day-to-day or our month-to-month spending is we don't actually buy the things that bring us joy. We buy and when I say joy, I mean long-term life joy. Live your best life because you're actually achieving those long-term, those big outcomes that you want to achieve as an individual. And what we tend to do is we start looking for short-term satisfaction. And that could be, going out with my friends and blowing thousands of rands at the bar. But actually the following day, there's there's buyer or spender's remorse because it brought you short-term joy for that night. But actually your long-term goal is you maybe want to go on holiday and you're better off putting that money towards a holiday, or you want to buy a car and you're better off putting that money towards a car. And that's why, when you're spending your money, it's about thoughtful spending and spending on things that actually bring you joy. And minimalism for me is a function of that. So when I make a decision, I'm thinking about, okay, if it's going to impact the environment, it's going to bring me less joy. So I actually factor that into the decision that I make when I'm actually buying something. I buy the things that I really need and will make me happy.
In our discussions with our listeners, one of the most disheartening and concerning things that we bumped into was that, especially in the art and self-employed type of sector, people do not really, first of all, understand where their money is going. They do not check their bank statements. This is one of the key things that we realized, and it was shocking when I was discussing with other artists, that they actually do not review their bank statements at least once a month, which leads to the point that they actually do not know where their hard-earned money is going. Teeth, since season 1, are you checking your bank statement?
Bro, I'm hard out here. I think when we did this kind of episode in season 1, I remember it was a revelation for me where our guest Kuda, he did like our first episode, Kuda Samkange, and he spoke about just check your bank statement once a month, and I was like, what, how, when, at what time? And I could say that I won't necessarily once a month, but definitely I do know what my statement looks like at least every 2 months. And if I can have a standard of once a month, I'm being honest. But I think a simple principle like that for me has just been like life-changing.
Did you hear what he said, Jikku? He said, how, when do I get the time? That's where your automation principle comes in, and this is where the application 22/7 really comes in. Please tell us a bit about the app.
Just hold on, please. Shouldn't we do an ad break before?
Oh yeah, Jikku, since we're trying to get paid here, we have ad breaks that actually do not exist. But either way, guys, we're taking a minute of ad breaks where we're going to sell products you're not going to buy, but nonetheless, we'll be right back.
As you can see, the graph clearly indicates that we are moving in an upward trajectory. These financials are looking much more healthy than last year. Season 3.
Bro. It's supposed to be season 2, bro. Bro. Listen, guys. Business of music with A1, bro. Ow! Woo! Finance for hippies.
War against broke, we fight no white flag.
Are you good?
I'm good. Thanks, guys. I wish I had a fire with me myself, actually.
Oh, okay. The automation, really the idea and principle of automation, taking the mundane out of analyzing your bank statements and so forth. For me, this is what your application 22/7 is really doing. But when you came on board, how did you see it? What was All Mutual's vision when they took over the app, and what was their goal, as it were, and how they saw it in the future?
Yeah, sure. You talk about, people looking at their bank statements, right? So I think that's definitely, there's a lot of individuals who today they receive the money in their account. The first time they engage with their bank account is when they receive their salary, because they want to see how much money is in the account. And then the next time they engage with their salary is when with their account is when their card is declined. When I try and pay for something and the money there's no longer money coming off of my card. I'll now go and check my bank account and I'll see, I've got nothing left, which is horrible. And then you also have people who are just budgeting or spending by bank balance. So they look at their bank balance every now and then to see how much money is left in their bank account, but they don't look at it frequently enough. And then you talk about the statement, right? And that's at least one step further on. But the problem with our statements is our statements are also not designed in a way that's conducive enough for us to actually understand and appreciate the information easily. So even if I look at my statement's not really designed to help me understand where my money is going. It's really just to show me at an individual level, these are the transactions. But that's not really easy for me to consume and easy for me to take action off of, right?
Correct.
And really the fundamental thinking behind where 22/7 comes from is we noticed that there was a gap in the market. Our primary financial providers are our banks. There are others, there are other insurers and so on, but our primary relationship from a finance perspective is oftentimes with our bank. And our bank is incentivized to help us spend our money. The way that the bank's model works is our banks are incentivized to help us spend our money. And that's the type of thing that they're going to do on an ongoing basis, encourage us to spend more so that we can get more rewards points. Swipe. I came off the airplane once and I was standing in Cape Town airport and I saw this massive banner, spend more on your card of, provider X and earn, 2 times more rewards points with their rewards program. And I just told myself, sure, the banks are helping us spend our money, but nobody's helping us manage our money on an ongoing basis. And that was the gap that 22/7 sought to close or help with. And, at the time we started the company, there was so many other options that were available, cloud-based technology, mobile technology, the ability to integrate with banks seamlessly and collect data for the customer. All that became available and allowed us to collect the data and show the 22/7 customer or user all the information in a way that they would be able to understand automatically, in a way that would allow them to make the proper financial decisions in real time. And that's what we do, right? Today, we allow you to link your accounts, your bank accounts, any bank account from any service provider in South Africa. We cover all the major banks, all the major investment companies and rewards programs and loans and any other provider that you may have an account with. We take all the transactions that are within those accounts and we automatically classify them for you. So think of this as a bank statement, but a much more simplified infographic. I mean, you guys are artists. You'll appreciate the beauty of being able to see something simply with the right type of, colors and the right way that the data is structured. It's much easier for you to see your data and make smarter spending decisions from there. And it's not about also getting it once every so often. It's in real time. So if I spend money today, by the end of today, when I open up 22/7 and I refresh my data, all my spend up until that point is actually updated on the app. So I can see how much I still have left, where my money has been going, where I should maybe cut back on things, where maybe I can put some extra money that I have available into savings so I can get to that goal I really want to get to. And all of that happens automatically. We don't have the time. We have such great intentions at the beginning of the year. We don't have the time to go and download CSVs or PDFs from our banking websites. We don't have the time to go and sit in front of our computer on Excel and enter and classify transactions and walk through budgets, or even on paper in a book. You are much better off linking an account to a system like 22/7 and allowing it to automatically pull and classify your transactions so that you can see where your money is going. It's not going to be easy from day. So on the first day when you sign up, there's a little bit of effort you need to put in. You need to classify a handful of transactions. So we get 93% of all transactions that come in, we get right first time. There's 7% of transactions that you need to get right because those are personal to you. And some things that we may classify may be different to you. So we may be saying Woolworths is grocery spend, but you may be spending most of your clothing and shoes spend at Woolworths. So that might be one thing that you may need to reclassify. But as soon as you reclassify that, we remember it. So you don't need to go and do that every time. We remember your unique categorizations. And you just need to do that once or twice over a couple of days. And then from then on, it's smooth sailing and you're on the path to being able to see where your money is going at any time and make smarter spending decisions from there on. We have people who save thousands of rands every month because they now know where their money is going.
I on board, I'm currently using the app, and I'll definitely agree with you. It's a brilliant app. And when you said 93%, I had 90% in my mind as well with the classification. The classification was so brilliant because one of the most difficult thing when you're trying to decipher your bank statement is that the descriptions the bank gives you, it's a long string of data that sometimes is a bit difficult to identify where it's coming from. I was very impressed by the fact that it managed to identify all my fuel expenditure, which is surprisingly high, I'll even add, but everything. And from a glance, there is no longer processing power you need to apply in deciphering that information. I could easily pick up Checkers, Woolworths, where I spent that money. And it's one of the easiest. Then I could take it a level above and analyze actually how much I actually spend on fuel for the full month. One personal surprise that came through to me was how much I was actually spending on food. And for the last 2 months, I've lost weight. So how is it that I've spent more money on food, yet I've lost weight? I blame this guy. Please, stop coming to my flat. How was your experience with the app?
Look. One thing, one thing I'll compliment you guys on that I've had from my point of view has been your customer or help, whoever's on the other side when you're having difficulty, as when you're signing up. I was like completely impressed, and we don't want to turn this like now we are plugging your app, because we'll get into certain other things as well. I was phenomenally impressed. And I like that you acknowledged the little curve that people experience in the beginning. I had some difficulty. There were issues with this 93.7. There were just some issues.
Cool.
I feel so bad because I don't have the guy's name. For 2 hours, he was going back and forth with me, checking up on me, as I was wowed. And I kept telling this guy as well, I was wowed that this is phenomenal. This is because this is an app. I'm not used to this, but to know that there's somebody who is responding immediately, checking up. If I logged on for 3 minutes, if I was offline for 3 minutes, he'd be like, hey, have you checked this? Have you checked this? Just let me know if you're okay. I'd have I really, really appreciated that, firstly, as a first-time user, because I was a little bit confused. So I really thought that was amazing. One thing that I know comes up, and you obviously have to, it would be good to get you to explain this to our audience as well. I know with Ndarkie here as well, when he was trying the app, he was excited about doing this episode, but we had to do a lot of research because Ndarkie, before he put his banking details on, he had security issues. When I told our gentleman, a friend of mine who's filming this as well, he was like, hey, but security, bro, you're talking about my money.
We would like to give you
Please.
to reassure the customers out there because I think the lack of information, that's what gives you doubt. When we looked into it, there were certain things that really assured us, because I'm quite skeptical, and I've actually tried the app before. It asked for my security details. I didn't give it my details, and I stopped there. But when looking further into the app as to the assurities and everything, the level of security, it provided me with full confidence. But I want to give you the chance to really tell our listeners out there as to the level of security that you guys have implemented to protect the customer and their hard-earned money.
Cool. Yeah, thanks, guys. Yeah, so that's one of the biggest stumbling blocks before somebody gets real value from the app. We know that there's a lot of South Africans who are concerned about their security and sharing of their internet credentials. And that's absolutely fair, right? You need to look after your credentials because those are some of the most sensitive credentials that you have. And you need to do your due diligence and make sure you're entering that into reputable entities like 227, right? We've been in existence now for 9 years, so this is not a new company, a new app that just showed up overnight. We've been around for 9 years. We've got 350,000 South Africans on the platform now who've securely linked over 1 million accounts. So we're currently sitting at almost 1.1 million accounts linked securely to the platform. Our whole business is built on being able to collect the information securely so that we can display it to you in a life-changing way. If that isn't done, the business will fall flat. So you can imagine that we think about this every single day, and we make sure that we're doing 1,000 things right every single day to make sure that the data is adequately secure and private. So some of the things that we do on the service today is that, the levels of encryption that we use, the way the data is collected, including your credentials and the data that we collect, is encrypted at the same levels of encryption that your bank uses. We're using 256-bit AES encryption, which is the same level of encryption that your bank would use.
Act like we know
I have
what
no
that
idea
means,
what that means. That sounds hot though. That is hot. That is, if you doubt it, that's what's up.
We don't know what it means, but it sounds hot.
That's hot.
It is the same level of encryption that your bank uses. At the same time, the service is read-only, right? So you'll enter your credentials into 22/7, and you will have a 22/7 username and password. And if someone ever had to get access to your 22/7 username and password, they would never, ever be able to transact on your underlying accounts. And that's because our app does not allow you to transact on the underlying accounts that you've linked. So you can't move money, you can't pay somebody else within the 22/7 app. In fact, you can't even get access to the credentials that you entered before. So if I enter my Standard Bank credentials into the 22/7 app, and I try and access those again within the app, I'll have to enter them again from scratch. We don't store those credentials in the app, and we don't. And so if somebody had to get hold of your 22/7 profile, they would not be able to get those credentials either. And they wouldn't be able to transact on your account because we don't store them. We encrypt them. They're in a secure vault outside of the app. And in order for you to access them again, in order for you to edit them, you'd have to edit them again from scratch completely, right? So service is read-only. The service uses the same level of encryption as your bank does. We also have our systems tested by ethical penetration security experts every year. We do that actually multiple times in a year to make sure that the service we're on top of our game from a security perspective. And we also have the same levels of cyber security protection from an insurance point of view that your bank also has. So if something ever happens to your money in a bank, the bank's actually insured against that event and they indemnify you. And in a similar way, we have the same level of cyber insurance protection on 22/7. So if anything ever had to happen to your money as a result of something that 22/7 did or didn't do, your money is adequately protected. And then, of course, we are backed by Old Mutual. So Old Mutual is a primary funder of 22/7. And they wouldn't put their name behind something if they didn't think that something was secure, and reliable and trustworthy enough. So, those are some of the reasons why, and I'm really grateful to you guys for giving us the opportunity to do this, but that's some of the reasons why South Africans should feel safe and secure when they're entering their credentials into 22/7. Your banks tell you not to do it, and they do it for correct reasons. But in this case, this is the best reason, this is the benefit that you'll get from doing this, and the security that we have in place to make sure that you're doing it in the right way means that it is the right thing to do.
Me and Teeth Swag, when we were looking deeper into 22/7, we bumped into Old Mutual. Automatically, we had a sense of security and assurance. I think that's one thing we actually discussed. I think it's something that happens at the back of your mind. People don't notice it, but Old Mutual has one of the most respected reputations in terms of longevity, in terms of if you think of a long-term plan you want to take, they're one of the top 4 names that come through. I think that's one thing that also gave me confidence in that, as you said, they wouldn't back an app where things like security haven't been tested thoroughly. And I think seeing their name pop up really gave us full assurance that it's something that we can definitely use. Teeth.
Yeah, no, for sure. I definitely agree with that. I definitely also like to just get from your perspective, how you kind of, or not how, but you know, in the context of South Africa, what role do you actually think this app is going to play in kind of going forward with just like general South Africans? Because I think it's a great opportunity, especially when we're looking at data prices going down and such things. I think there's a massive role that you're about to play. What's your perspective on that?
Yeah, so if you think about why Old Mutual, coming back to Ndakie's point, right? Why did Old Mutual see the value in backing something like 22/7? If you think about where Old Mutual plays, right? Old Mutual is really about your long-term financial planning. Like they want to make sure that your long-term future is looked after. If something happens to you, that your loved ones are cared for, that you have a safe and successful retirement, that you're saving for your child's education. But the truth is, most South Africans can't get to that point in the long run if they don't sort out their money in the short run. And the guys who are supposed to be helping us with that, or who were supposed to be helping us with that, was our banks. And they haven't, they've fallen short in that regard, at least in some part. We have some banks that are doing a good job, but for the most part, banks were not doing that, right? And where Old Mutual really sees 22/7, where 22/7 can really play a role, is in helping people build financial strength in the short term, so that they're able to lift their heads and think about solving for their long term, and that's where we really believe we can make an impact. Lots of South Africans don't know where their money is going, and they're exposed to the risk of expensive debt. It's very easy to get debt in our country, especially early on, and you get debt up until the point where you can't afford it anymore, and at that point it's already too late. And what you want to do is you want to make sure that you are spending within your means as early as possible, and you're protecting yourself from getting into expensive debt, so that you can actually prevent that from happening. And if you are in expensive debt already, then you make a plan now within your means. You track your spend, you see where your money is going, and you do your best to get out of that expensive debt as quickly as possible. And then do what you can to stay out of that going forward. And really, that's where 22/7 has a really powerful role to play. We can help South Africans really get a hold, take back control of their short-term finances, take back control of their money today, so that they can be in a position where they are living within their means, they've freed up enough disposable income, and they're now able to reach for their best future lives. I'm able to do the best I can so that I can live my best long-term life. And I can, if I want to invest in a long-term financial services company, take out investments for my child's education, or, pay for insurance, which is quite important, I'm able to do that.
The sweetest analogy you used while describing 22/7 was it's like Google Maps. It shows you exactly where you're moving and leaving your money around. Just take us through the key functionalities, because I noticed that it's actually a very full functioning. It has quite a lot of other features that can really improve in managing your own personal finances. Just take us through some of the key salient features of the app and how the user can take advantage of them.
Yeah, sure. Great. So the first thing you'll do when you link all your accounts to 22/7 is you'll be able to see your net worth. There's no other place in the country where you can actually see your net worth in one place. So all your accounts, all your assets and liabilities together in one place, and how that's changing over time. And we're so hung up in South Africa on our credit scores. We think about a metric that everybody wants to look at all the time. It's your credit score. But actually what's more important than your credit score is the direction in which your net worth is going. So if your net worth it's not about, don't think about it in terms of the absolute value, it's the change in your net worth. So has my net worth gone up because I am saving more, or I am paying down my debt, your net worth will actually tend to go up. So the first thing we do, and one of the most valuable things that customers get out of using the app, is being able to track their net worth. The other thing we do is we classify your transactions for you automatically, and we give you insights off the back of your transaction. So we show you how much you are spending relative to other people who are in a similar income bracket. We show you how much you've been saving, what percentage of your income you've been saving, what percentage of your income you've been spending. We show you which of your, which merchant, so where are you spending most of your money, at which type of merchant. So those types of insights really give you a personalized view into how your money is doing, and also gives you a benchmark against how other people are using their money. And if you think about the most sensitive topics to talk to people you love and care about, money is one of them. So we oftentimes don't have those discussions with people that we love and care about. How much are you spending on this, or how much are you saving here? And what we do is because of the data that we have and the way we're using that data, we're actually able to show you and benchmark you against people who are in a similar position to you, and give you insight that will give you information that might get you to change, the types of actions that you'll be taking. The other things that we do on the app is we allow you to link your vehicle. We show you the market value of a vehicle and how that changes over time. If your car value depreciates by more than a certain threshold, we remind you that, hey, it's time to check out your car insurance, because as your car value goes down, so should your insurance premium, because your insurance company is insuring you against the value of your car. Most times your insurance company is not going to remind you to check your car insurance premium, and that's a surefire way to save your money. So we allow you to track your net worth. We give you insights on where your money is going. We're classifying, and that's both visually in terms of tracking your spend, and in terms of how your money is being spent compared to people like you, and across different types of categories. We allow you to track your car value. And we also show you specific insights around your debt. And when your credit card payment is due, for example, how much of how much interest you paid on your credit card in the last couple of months, and things like that, which people don't really, if we have this head in the sand view, or we're looking at our statements and we can't make head or tails of our statements, what we really do is we simplify that information into a way that's understandable, and then really empowers you to make smarter decisions. And the aim behind the app, right, is I want to help give you the information that you need in order to spend within your means. So spend less than you earn, in order to free up disposable income so that you can start saving for the things that matter. And we are currently in the process of revising this feature. So it's currently on pause for new business, but it's going to come back. And that's what we call goals. So within the app, once you have disposable income, we allow you to set up a goal for an important life event that matters to you. So you want to save for an education. I want to do my MBA, for example, and I want to save towards that. You can set up a goal towards saving for your MBA. And as you start to free up disposable income, you can put that disposable income, the extra income, towards your goal, and you can track your progress towards achieving that particular outcome. And that will come back. It's currently on pause within the app as we make that feature even better than it is today. That's some of the stuff that we do. It's help you spend within your means, free up disposable income so that you can achieve those important life.
Powerful, very powerful. Teeth.
No. I would just be so interested though to find out from you, from your history as well, and just from the things that you're passionate about, and from the experience that you've obviously had working on 24/7. How are we doing? From what's the data telling you in terms of how are we reacting to this? How are we handling this well? How are we doing, as South Africans, I guess?
I can answer a portion of that for you, Jikku. South Africans are spending way more than they need to on fancy vehicles. This I'm sure of. Please confirm my speculation.
Give me I'd really appreciate just an honest.
Especially the mid-range boys. The mid-range boys are out of order. But please continue.
I think that's the sad reality the world over, right? The sad reality the world over is that because, and it comes back to the fundamental. It's exactly the reason why this podcast, this blog exists, right?
Yeah.
Is that nobody teaches us how to manage our money when we grow up. During school, during varsity, most of the times our parents themselves were struggling with money. So it's difficult for us to even use them as role models, right?
Very true.
But the beauty of the internet and the world that we live in is that all this information is available, but also the problem with too much information is then it's too difficult to get to, right? Or So it's really great that you guys have this podcast. But what we're seeing is the bulk of expenditure is around consumption. people spend on things that are not actually improving their overarching net worth. Bear in mind that the typical 22/7 user, because they're already, the 22/7 users have already opted into wanting to make their financial position better. So these people are typically more financially resilient than the average South African, or they will get there. I mean, we look at the 22/7 base, the average debt to income ratio is 34% versus the South African national average, which is 72%. Our savings ratio is much higher than the national savings ratio of 0.1%. The national savings ratio is 0.1%. On 22/7, it's around 16%. People are saving around 16%. So
there's a bit of a bias there.
So there's a bit of a bias. People who want to look after their money are opting in to use the app. Yeah. And people who start the app, using the app, become financially secure and more stable in time, right? But if we remove that and we look at the raw data of people who are just coming in, we can see that people who are spending before they are saving. So they do this thing of, I get my money in, I look at my bank balance, I wait for my debit orders to go off, and then I spend whatever I have. And then if I have something left over, I'll put that towards savings. And what's happening is that whatever is left over never happens. I actually run out of all my money, and then I look for lending. And it's in the form of a credit card most of the time. It might be a personal loan. And basically, I'm then getting myself further and further into a bad position over time. And what you need to do is you need to close, you need to contain that situation as quickly as possible. I mean, it's very difficult and easy to say here, okay, don't worry. From next month onwards, don't take out credit. Actually, you've still got a lot of people will still have a lot of credit that they need to pay off. But there is a step-by-step process that you can get there. And the first step is really just seeing where your money is going.
That's true.
And, if we look at where most South Africans' money is going today, I talked about consumption. It's entertainment, eating out and takeout, clothing and shoes, transport. People are spending more on transport than they should be spending because they're driving a fancy car and they live very far away from work, so there's a lot of fuel costs, So you need to think about how you can minimize some of those costs. I mean, especially the wants, right? Clothing and shoes, eating out and takeouts, and entertainment, and just live within your means, pay down your debt. And when I say live within your means, it's funny. Like when most people hear the word budget, right? They think of tracking my spend and setting a budget as constraining, right? But the irony of being in debt and freely spending without actually looking at where your money is going is you end up in a position where you're far more constrained, where you have to pay the debt. You have no other choice with what to do with your money because the bank is coming after you for the credit card that you haven't paid for months. And if you don't get it right, there's risk of etc. being blacklisted and not being able to take out credit in future, not being able to buy a home, not being able to go overseas if you need to take out some credit for traveling. But that's another story. You shouldn't be taking out credit for traveling. If you want to take out a loan for studying or for buying a home or for even buying a vehicle, right? In some cases, in most cases, we need to take out a loan to buy a car because cars are, that will take a very long time to save for. But don't take out a loan for a car that is clearly beyond your means, Just because the bank will give you X amount, you don't need the fanciest car. You need the car that will get you from A to B, that will allow you to perform your job and earn an income. But also, you've got to find a balance between that and other things that you want to put your money towards. Because, I also appreciate that there are people who find cars a part of what makes them happy. But then you need to balance that. And that's where a budget comes in. If I have a budget, I can make sure that the money is going more towards the things that I love and I want to spend my money on, and less to the things that are impulse driven, that are short-term happiness focused. If you want to spend money on a good car, then that's okay. Just be aware that means there'll be less for clothing and shoes, less for eating out and takeouts, because you really want to look after your first love, which is your car. It's really, that's what the budget is, and tracking your spend is all about. It's about having a plan for where you want your money to go, and especially to those things that bring you joy, and less or nothing to the things that don't. And if we can move away from a consumption-driven way of spending, where we're just spending because we think we need short-term happiness, and we save more upfront, and we live within our means, and we focus on the things that will make us happier, I think it will bode well for South Africa's future, because we'll be much more emotionally and mentally happy and more.
With that pause, Jikku will take a slight break. We'll come back in 30 seconds while we sell products you do not need.
It's about that time again where we explore the world of art, culture, and heritage.
It's the Almost Perfect Podcast. Hey, it's Bob Perfect here from the Almost Perfect Podcast, a celebration of fuck-ups, failures, and falling flat on your face. It is a podcast that believes you can learn from experience, but that experience doesn't have to be your own. So come join me every single Friday as I chat to a different creative type. But basically, we chat to various people in the creative industry about how they got to where they are. So if you're trying to get some tips and tricks, or you just like to know that, hey, there's someone out there who is doing it the same way you are, if you want to feel a little less alone in your creative journey, come check it out. It's almostperfect.co.za. Let's check out the next episode of Finance for Hippies.
Thank you very much for coming back. We still have our guest from 227, Jikku. Jikku, more than ever, we are suffering from the problem of keeping up with the Joneses, which is exactly what you're trying to mitigate, because it really comes with lots of problems. As you mentioned, in the future, you will be totally restricted in terms of financial mobility. How is your Instagram profile, Jikku? I don't want to hear this message from you, but you're balling with champagne on Instagram. Do you live this message, Jikku? Are you driving a Polo Vivo, Jikku? Are you restricting your spending? Tell me the truth,
Jikku. Let's be clear about, there's nothing wrong with it, living your best life, but living your best life within your means, living your best life within your means, and sharing that on Instagram. If you can afford to buy a nice pair of shoes, or you are at a restaurant that you've always wanted to go, and you're eating there, as long as that's within your means, as long as that's something you've saved for, those are the types of things that you don't want to be buying on credit. There was that saying that if you can't pay for it with the cash in your bank account, you shouldn't be buying groceries or clothing. Or, and I mentioned this, even a holiday, you shouldn't be buying those things on credit. Those are things that you should be saving for in advance. So really what you should be thinking about is, am I using my money in the way that's going to bring me joy? Am I using the money in a way that is actually within my means and protecting me from getting into expensive, life-restricting debt? And if you are doing that and you're spending on something, if I've got a bottle of champagne and that brings me joy, and that's something that I saved for and I've actually earned for, it is more than welcome to share that on Instagram. In fact, I applaud you for sharing that on Instagram. You deserve it. Sure. Actually, if you earn it, right? If you save for that holiday is so much sweeter
No, that's
because
true. Yeah.
because there's this other statistic, right? They say that the best time to actually book a holiday in advance is 6 weeks before the time, right? At least 6 weeks.
Yeah.
Because what happens is you get the moral benefit of or the mental benefit of looking forward to it, right? We always want to look forward to something. In life they say you should have a couple of things: someone to love, something to look forward to, and a purpose. You should have a purpose, someone to love, and something to look forward to. And there's something you look forward to as a holiday. But if you think about it as a saving, if I'm saving to go on holiday to Thailand and I save for it and it takes me a year or two to save and I get there, the fact that it took me that long and I've been looking forward to it is so powerful. And when you are there, it's so much more enjoyable. And you really reap the rewards of that journey to get there. So no issues with the Instagram life, but live the Instagram life within your means and actually focus on your own Instagram profile. The downside of things like social media is that we are comparing ourselves to other people all the time. In fact, I'm sure you've watched some of the shows recently where they talk about the negative effects of social media and how it can make you feel more depressed because you're always posting the good things and none of the bad, right?
None of the bad,
If you use social media smartly and you're just using it to celebrate your own achievements and you're acknowledging those of other people, but you're seeing that those are the achievements that they're having. There's a lot more going on in their lives that you don't know about. That's okay. Use it responsibly. I mean, I guess that's another episode in its own right?
Definitely.
Being able to use social media responsibly.
One thing you mentioned is purpose. And I truly appreciate the existence and purpose of this app. For me, I think it's one of the biggest game changer in really practically helping people to manage their finances. For me, when I logged into the app and suddenly it was like I'm watching a movie, a film that I've been living, but I wasn't aware. It's a depiction of my life financially, how I maneuver, and it's important to have something that gives you a true reflection and not some of the biases that I have on my side, thinking I spent 500 on groceries, knowing very well not knowing that I spent 2,500. So the purpose of the app is really, I think, congruent to what we're trying to do as well, is for people to take charge of their financial lives and not let it to allow it to be some random outcome that they don't have control over. And I think it's something very important that we all need to do. And it's a message we always keep reiterating, that we really have to take charge. Use all the tools that are available, tools like 24/7 that can really help you. I think, when was the last time people really checked their net worth? It's something that I think it's now recent that people actually do. Having everything consolidated, seeing the net value. Teeth?
Nah, bro, I wouldn't even lie to you. For me, net worth was just like a rich people thing. I was like, only rich people can check out their net worth. It's above my pay grade. So, I found such additions like really, really interesting and really a value add to just to the experience of the app. Off air, we did have a few discussions. Obviously, we're reaching the tail end now of this interview, and I was interested to just find out. You had spoken of a bit more content that's going to be coming out from you guys. Could you maybe just put us on a page about that, because I would appreciate to be seeing that kind of stuff as well from you.
Yeah, we would really like to see you guys getting more users, to be honest, and getting the word out there through this podcast. Also, the plans that you guys have. We're really interested to getting people more and more on board with this.
And we're going to go from strength to strength. I mean, we certainly have big dreams and aspirations of becoming more prominent in South Africa, and also expanding the functionality. For us, the important thing is to get the word out across many more South Africans than we have today. Our typical customer base is still much more inclined towards middle to high income customers. So customers who could use the service but don't use the service today because they don't know about it, because of data constraints and so on, is a challenge. Data constraints and then size on your device. Like, people don't want a big app on their phone, and they don't want an app that will actually consume a lot of their data. So we're currently working on a light version of 22/7 that will be more widely accessible, and we can reverse bill the data for that service to customers so that they can access the service for free. The other thing we're working on is helping people with onboarding on the app. So we think that we can do a lot more when they get into the app, where there's a much more natural journey from the time I land into the app to the time I get value from the app. So we're currently we're in the process, this current sprint, we work in 2-week release cycles in terms of introducing a better version of onboarding for customers to get from zero to step, I'm getting value from the app as quickly as possible. And then, like I said, there's a feature on 22/7 which allows you to save and track your important life goals. We put that on freeze in about August this year, and we are at the drawing board thinking about how we can make that even better. So you need to watch this space, because we're going to allow customers to, when it does go live, we're going to allow customers to track their goals regardless of where they save or invest. They'll be able to see how far they are towards achieving the things that matter to them. So that's also on the horizon. But yeah, we're going to grow from strength to strength. We really appreciate your support, guys. It means a heck of a lot. And when you talk about purpose, the stories that drive us are the stories that we get from our customers, where they're getting out of tens of thousands of rands of store credit debt. They're saving. Someone was saving on an app store review. They told us they were saving 6,000 rand per month after they started using the app. We have people who find suspicious transactions. I forgot to mention that as an app feature. We allow, because of the way we classify your transactions, we actually automatically identify suspicious transaction activity on your account. If there's a suspicious debit order, a suspicious transaction that looks more like you're spending more in a particular category than you would typically spend, a double debit if you've been double debited by an account. So we've had customers who tell us those stories as well, which really drives us to want to do more and help more people. So we're quite excited about what lies ahead.
No, it's a hell of an app, I must admit. For me, I think you found a long-term, full-time user with it. This is how I'm going to manage my affairs going forward. I think it's easy, convenient at a glance, and I can take steps immediately at any time when I feel that I'm overspending, which is the whole point, is enabling me to make better decisions live and not at the end of the month. So it's something that's quite critical to us. Steve?
No, for sure. I think you guys are on the pulse. I think Ndarkie here, we release mixtapes and music with every season. We might just have a 22/7 track.
Yeah, we might just
the streets. We're not too sure right now. A 22/7 song featuring 22/7.
No, for sure.
And 22 divided by 7 is pi. I know. We got a lot of things we didn't get into here about you guys, but I think it's just like a pleasure for me. I'm looking forward to actually just spending time on this thing. Maybe 3-6 months to really see what are the lessons learned from it. I just have like 1 or 2 other things I want to be able to touch on. Sorry if it looked bad. I was just scrolling for something, but I actually finally found the name of the person who was helping me. His name was Sven. I don't know if those are real names. That Sven, S-V-E-N. Yo, Sven. I don't know if maybe his government name. He doesn't want it. I'll just give his name if you know him. Shout out to Sven. Sven was helping me through some hard stuff there. I wanted to give up, but he's I'm really, really serious. I'm like a first time user, and he was just there. He seemed like really, really involved in the process. So I finally found his name. Shout out to Sven. And I think just the last question then I probably had was for you. I had mentioned on the quote at the beginning of the episode just about the quote that I heard you say about giving the Rainbow Nation a second chance, and I just like to know where you feel, since having made a quote like that, where you want to be one of the people who are giving the Rainbow Nation a second chance. You feel like you are on the right journey towards achieving that?
Yeah, absolutely. I think we as a country, we've gone through many ups and downs. I think, in the last while, we've gone through a bit of a down, and now we're up. We were back on the up. We've gone through a down because of the global crisis and the pandemic that's underway right now. But if anything has taught us, South Africa and South Africans are resilient. We will find a way and we will make it work. And we believe that the little bit that we are doing, and the environment and the way that the environment is going to go. I mean, we believe that without a doubt that data is going to be more pervasive, devices are going to be more pervasive, tech is going to be more pervasive, people are going to adopt these things regardless. And so we need to be there to help them, because it's not just about tech and data and devices on their own. It's about how that information is communicated to South Africans and how it empowers them to make smarter decisions. And I think, we're going to be in SA. We're not going anywhere. We are going to be in SA building the service out for South Africans, because we want to be part of that recovery, and we believe that recovery is possible, and it's already happening. We can see it in the data. We've seen people who've struggled during the last couple of months, but we can see that we're back on the recovery trail, and we'll be there as part of that. And all the sends, I mean, we call them sends, so send is not a name. In fact, Teeth, our customer support is, they're all real human beings. Sometimes people are so amazed about how quickly they respond.
Yeah.
All real human beings. And they are arguably the best customer support team in the country across financial.
That's the best I've ever experienced.
There's 7 of them. There are only 7 of them who look after our 350,000 customers, and they do a phenomenal job, an absolutely phenomenal job. And I'm really grateful to have them in the team, and I'm really grateful that you were able to share that experience. Thanks, man.
Please tell us if you have any other different apps that you guys offer other than 22/7, and where we can find the app and it can be easily downloaded.
Yeah, sure, Ndarkie. So we've just launched 22/7 Business, which is actually 22/7 designed to support SMEs in terms of managing their small business financials. It's targeting small and medium enterprises, so people who are at early stages in terms of their enterprise, but want to get control of the financial position of their company. We allow you to link your business bank account and track all your spend in much the same way that the personal app does. But at the same time, we also allow you to send quotes, track the acceptance of those quotes, send invoices, track the payments of those invoices. And soon we're going to be enabling the ability to apply for lending through the app via the invoices that you've issued. So, and that's also just like 22/7, our personal finance app. It's also free to use. So small businesses will be able to link their accounts and track their financials, send quotes, issue invoices, and track the payment of those invoices, all for free, just like they can do with the personal app. And we did that.
Sorry, just for clarity for the listener, for the personal finance one is called 22/7, and for the business, does it have a different name?
It's called 22/7 Business. So you can find the personal app, which is, like I said, it's free as well. You can find that at www.227.com. That's 22 and the word 7.com. You can also find it on the Huawei App Gallery, the Google Play Store, and the iOS App Store as well. And then the business app you can find at business.227.com, business.22 and the word 7.com. And you can register for that and use it in much the same way that you can use the personal app today. And that's also free.
Okay. And then lastly, is this exclusively to South Africa, or where else are we up? We still operating as 22/7 exclusively to South Africa, right?
Yeah. So the funny thing is we always get asked by our neighbors and people who leave South Africa, expats who go overseas. I actually had a call with with an author, a personal finance author, the other day, and she moved to the UK, and she was saying that she can't find an equivalent in the UK that's as good as 22/7 in South Africa. So who knows? Maybe we might expand in time. But for now, we believe that our first mission lies here. We still want. We're not happy or satisfied with where we are right now. We think we can do a lot more in our own country and help our own people. And then once we get that right, we will be more than happy to expand outside of SA.
The business app already, when my mind is rattling, I can see many great benefits. As you said, sending out codes, invoicing, checking if the invoice is paid. But one of the biggest issue that we've encountered while dealing with our guests who have small businesses is the matter of tax. I already suspect that this will be a phenomenal addition for a small enterprise in managing their taxes. Do you have any additions on that?
Yeah, so 100%. Because of the fact that we classify all your expenses automatically, it makes it so much easier for you to see where the money is going. You can export those reports, and you can file for tax a lot more easily because you'll be able to distinguish between the different categories of spend. You can exclude any personal expenditure. You can include any personal expenditure, which actually for business purposes, you can classify and allocate that to the business. It's as easy to use as the personal app. So being able to report report for tax purposes off the back of the data that we collect and classify for you is a lot more easy. I mean, in time, watch this space, the process will become even easier. But for now, just the matter of linking your account and having it automatically classify those transactions makes it 10 times more easier than it is today.
Incredible. Especially with the addition of enabling to apply for financing through the app. That will be really giving an edge to small business owners in trying to secure financing for their business. Jikku, this is incredible. Keep the good work pushing through. I think with those two apps, they really cater for majority of the needs that a person could ever need in really having an aerial view of their finances. What a great app. We're not selling this. Well, we are selling this because we sell things. But what a great app. They have found a full-time user from me. Not only that, it's word of mouth is one of the most powerful form of advertising. And every chance I get, I'm going to tell whoever is willing to listen to try the app, because I think one session, 30 minutes, you'll definitely see the benefits are evident from the get-go. So congratulations on the app. Work hard to improve it as you're still working on it, and then going forward we'll still preach the message of as you guys are, of financial literacy, which is, I think, aligned with us, Finance for Hippies, 22/7, and All Mutual, who always look at the long-term success of an individual. From us, thank you very much for joining us. Any last message?
I'm good. Shout out to every Sven out there. Shout out to all the Svens. The Svens out here, man.
It was a great turnaround time.
Turnaround time. Best support team. Thank you so much, Jikku. Thank you so much to Robin. So, within hip hop, shout out to just the whole 24/7 team. They know who they are. Shout out to you. Shout out to just like everyone. Shout out to our team here as well, helping us get this whole thing together. And thank you so much, Jikku.
Thank you very much for taking the time
to. You don't know where your money went.
Ask 22/7.
Drop that 22/7 app and you're going to get your answer.
For sure. That's it from us, folks. We'll check you again in the next episode, where we'll be looking even deeper as to how to manage your finances, forecasting all the methods that are there. See you soon.
Finance for Hippies, teach swag and Ndarkie.